Kerry Kaikoura relief after the earthquakes?
Yeah, we've had the government come out to do some tax relief for them. So obviously with the earthquakes, there's been a number of buildings destroyed or badly damaged, so the insurers are going to be paying out on those. Now for a lot of people they get paid out, it normally means that they're going to build a new building, etc., and they get clobbered with depreciation recovered. So all the depreciation claimed in the past gets clawed back as income, and you end up with a huge tax bill. So the government have come out and said, no, we're going to do some rollover relief on that. So if you are in that situation, you're not going to have to pay the tax up front. It's quite complex the way they've done it, but it does mean that you're not going to have a tax bill this year. You will in the future, but not now.
Yeah, well, that was a bit naughty, isn't it, when you think about it? But
yeah, it's always been in there, but it just in major events like this, it really does bite hard. And those tax bills, at a time when you're trying to recover, are just unnecessary.
yeah, because I know from personal experience of rebuild, you pay more than what you needed to.
Exactly, yeah.
And you've got excesses and goodness.
Yeah, you've got all that, and there's all the unexpected costs that come in. So, yeah, this is a good little measure. So if you are in that situation, talk to your accountant about the insurance payouts you're going to be getting. There's a bit of planning to do, and they'll put all the steps in place.
Worth every moment, though.
Yeah, and the other side, of course, is the insurance payouts. There is GST on them. Some people have said, oh, that's unfair, I've got to pay GST now. Well, when you start building, you do actually get it back. So just remember to put in your GST return.
Very good thinking. Now, the world of trusts is being reformed.
Yeah, for a long time, for decades, in fact, the trust law has been untouched. There's a draft bill now that's come out where they're going to start making some changes for the better. So effectively there's going to be a few more rules and things, so you have some practical solutions to problems, and hopefully the cost of having trusts will go down, particularly when it comes to fights between beneficiaries and trustees and that. With a bit of luck they won't be hitting the courts.
Will this be new trusts or to existing trusts?
It's going to be for all trusts. So one of the key things is if you're a trustee, and a lot of farmers are, or they'll have their own trust, is that you must know the rules of that trust. So effectively you've got to know that trust deed around it and actually live by what those rules are. So you can't go and do just what you want to do. You've got to act honestly and do it in the proper way. And the biggest thing is actually if you're doing something with the trust, think about who your beneficiaries are and make sure it's for their benefit. And that means all the beneficiaries, not just like normally you might be named as a beneficiary. You can't just do it for yourself.
Right.
You've got to act in the best interest of everybody. So you can't say, well, I'm going to do this because I'm going to get the payoff now and I don't worry about the beneficiaries down the track. That won't be a permit. You can't really do it now, but this is going to be put into law that you can't do that.
Because some trusts make money, don't they?
Oh yeah, and they're supposed to. As a trustee, your job is to make sure the value of that trust stays or goes up. It should really be going up. If you're losing money in a trust, then you are very, very liable as a trustee for not doing your job right.
And you can face charges?
Yeah, you could actually be asked to pay back the losses to the beneficiaries of that trust. So if you had a trust that's worth $1 million and you lost a couple $100,000, those beneficiaries, if they can prove that you didn't do your job properly, could come after you, and personally, you have to pay that trust back the money lost. So it's got some big implications if you don't do it right.
So yeah, so once again, if you're a trustee, you probably need to talk to your chartered accountant.
Yeah, you should be talking to your accountant, and if there's only husband and wife or a couple of mates as the trustees, you haven't got a third independent person in there, get that done. You should have someone there guiding you as an independent to sort of make sure you're playing the right way.
Well, do accountants put their hand up?
Yes, some accountants do. They will have normally a trustee company to limit their exposure, but a lot of
clawing back at that.
But a lot of accountants will be in there, and lawyers are the same. Both lots will get in there and help with.
So how come the professional people can have some sort of thing to hide behind, whereas I, as an individual, don't?
Well, no, you could. There's ways of structuring it, but again, it's a case of looking what's best for you and actually sitting down with the lawyer and the accountant in the same room and saying, look, can I protect myself and become a trustee? So,
right.
yes.
No, thank you for that. Now, the other thing is payroll changes.
Yeah, this time of year, we've got a lot of people saying, look, I've been doing my payroll manually. Is it time to hand it over to you, or should I go down the computer record track? So we're talking to a lot of people saying, look, now's the time. A lot of them also think, am I really competent enough to do it? There's all the ongoing changes. Staff come and go. The holiday leave is all much more complex. So we're sort of saying to people, look, it's about time you actually move into the modern world. Manual, unless you've only got sort of one employee, is really not the way to keep going. You can make too many mistakes and get caught out too quick.
So you as chartered accountants, you've got some sort of computer program thing.
Yeah, well, we offer a payroll service to our clients, and we can also provide clients themselves with different payroll solutions if they need it. So if they decide they want to do it all themselves, we can talk about what they like and what they're going to be doing, and then recommend a payroll solution. And there's a lot of them out there, so it's a big choice to make.
Yeah, okay. I mean, how do you know if you're buying a good one or not?
You need to.
That's a hell of a question.
It is,
for
but
an accountant.
first you've got to start. Are they a reputable company? You know, have they got a track record of having payroll solutions in the past? And if they have, well, that's a good start. But then also, how often do they update it, and what's the cost of updating it? So some will sell you just a payroll solution. It'll do the next 12 months, and if there's any changes that come out, well, you just got to go buy a whole new one. Whereas others will have an upgrade path, so there might be a little monthly fee that you pay. But as soon as a change comes out, their software gets updated and you're up to date with the latest version.
Because there are a lot of changes that are happening in any year.
Oh, there is, yeah. So normally 1st of April you have 1 or 2 changes. So like this year we've got the minimum wage rate going up, so that will flow into all the payroll packages that are out there at the moment. But if the government does a budget and suddenly decide to cut tax rates or increase them or cut ACC or whatever, 1st of October you can also see another raft of changes come through, because that's normally the date they go for. So it's key to make sure that payroll can be updated regularly.
Because it is confusing.
Very, yep. And it's very easy to make mistakes. So the common ones we see is that the annual leave, people miscalculate it. They forget about the rate of the pay on an annual leave day can change because someone might have worked overtime or got a bonus, etc. And so that's one that most employers will get tripped up on.
And we don't mention things like state holidays.
Yeah, no, they're even more complicated.
Gary, thank you very much indeed.